Every order I had to get where I wanted it to go is fulfilled. Oh yeah.
The red zone.
Yeah, the test of the trend line. That's the next thing I'm wondering about, whether or not it's going to be a negative test. Well, it's in one of those situations again where I've worked my ass off and there's nothing that we can do. If we touch it, we lose. If you touch it, you lose, basically. That's the way it works. You know, if you take off enough to make sure you've been paid and that you're satisfied with the targets that you've hit, now everything is bonus beyond those targets. If we can get exposure to the break of the red yellow line, then we're laughing. But it may make us work again in the future. You know, with new lows, or until it comes back to new lows. I mean, there's no better price to acquire than the 261 and 188 that made the lows. So what else would we want to do? You know, if we give up the position that we have, we lose exposure to the break of the red yellow line. And if we were in nothing, would our next trade not be to get exposure to the break of the red yellow line? So why give it up when we have it? It's best to keep it and enjoy it and work it and hedge it, you know? Instead of taking off so much that if you have a sizable position where you can hedge it, then that's a viable option. So it was a little bit it's not as easy to manage the position if you don't have the full flexibility to withstand all of the retracements that it could make. You know, because we know it can even make 88% retracements, and if people can't handle an 88% retracement, well, they're not in from the bottom. But in my opinion, it's better to have taken off 70% of the position and then let 30% of the position endure the 88% retracement so you can avoid having to catch it. Because if you catch it and it's wrong, then you just straight up lose money. But if your stop and profit hits at the 88, then you're still making a small amount of money, and you're not losing any. So that's better that way. And you don't have to take any new risks, whereas usually you would have. But this is that negative response to the 188 that I was talking about before. A very similar style of motion. Oh yeah, see? It's like as I'm saying it, does it. So hedging was a good option. If anyone did hedge, then, you know, you can take off some profit on the hedge and continue to hold from the low. You know, it's like today's been a day where it's been very common to make 61% retracements and even go through 61% retracements. Because until it makes a new low, I'm free. The job has been done. And now that it's come down, hedging was the best way to go about it. But now people that hedge, they don't have to find the bottom. They don't have to find the bottom at all. They can keep their stop wide because their hedge is protecting their trade, not the stop. The stop can be kept at the extreme and endure the entirety of the pullback. If there is a 61, then you're fine. If there's an 88, then you're fine. If there's a 78, then you're fine. Doesn't matter which pullback it makes because you're still in and you're benefiting from the decline. If it makes a new low, then you've got your hedge from here. And you can try and fight back your long trade for the exposure to the red yellow line, and it can also afford you the room to be able to get an even bigger position if you want to take on the same amount of risk that you took when you were here. Like if you bought 10 contracts here and then you hedged, let's say 3 up here, just for the sake of it, and it came down, well, in order to get your initial 10 back, if you're holding 3 short, you're not actually taking on the same risk. You can afford to get 13 and take on the same risk as you originally did when you were 10. So now, when the trend breaks, you can actually use more size, and you got it without taking on any more risk than you originally did when you took your original 10. So you can afford to take more. Now, you can also say that you could take your original 10 with 3 less risk. Like it has less risk than just taking 10. You're only really getting the exposure of 7 until you cut that 3. So you know that you can get that same amount, and if you're wrong on it, then you're only losing on 7. You're not actually losing on 10 like you would if you took it here with 10. Because if you lost on that 10, it's just straight loss as a 10. You know? Very difficult to understand. A lot of people don't want to have anything to do with hedging, but it's funny how the institutions name themselves after it. Why let them do that? Why let them get that 10 for 7? You know? Why let them benefit from the dump and not have to catch the lows? And it does make it interesting when I can see that the distance we moved away from the triangle was also very similar to the distance of the triangle. We can also see that this is making a very clear triangle. I already had it up there for a second, but I took it off for some reason. Still there. You can also see that when we made this triangle itself, that it came from another triangle that was almost like expanding. Almost like it was expanding and this one was contracting. You know, like we had that going on there. A little bit. And you know what's funny is we can mark in the first of the three here because it's never really come back and attacked the 61 from the underside, but I can see it's being pretty unfavorable to those that are part of it. One thing that really kind of stands out is the fact that we made one low there and then made this big movement, and now we've potentially got the third one coming in like that, which is kind of disturbing. So at the end of the day, it's got that kind of characteristic, and it has been doing that a lot. You know, we've seen lately that sometimes these two lows can be similar to these ones, which is, you know, it's kind of too far away to make them exact, but making three drives nonetheless could easily be on the table. Definitely got some freaking movement. 188 just got tested. Denied the first of the three lows, still untested. Sort of a similar style of movement to what we had at the beginning of the day has continued us beyond. So AB equals CD there too, which is interesting. Another usage of the 127 we could say, but there's also some more fibs down here that could have been relevant. Another 188. I mean, 188s have been really popular today. So we've got 3 B points here too. Like technically because we made 1, we made 2, and we did make 3. Like if I go back long enough, you know, we'll see that I went 1, 2, and 3. We did make that, but we didn't come all the way back to the first one though. So the first one becomes an interesting level, not just the second one. So we'll take that into consideration. And I find that funny too because this old failed 3 drives pattern is basically that same level. It's also an old 61. And I'll put it as the pattern. AB equals CD, because it was again. AB equals CD. So from here to here to here to here. Well, no, sorry, from here to here to here to here. That's how it was.